Hello students, this is CA Pragnesh Kanabar, CA Final and Inter Audit Faculty. Now, we have RTP for November 22 which has been issued by the ICAI, and we are going to decode that RTP in a very smart, crisp manner in this particular video. The unique thing about this video is that I am not just going to tick mark on RTP. Obviously, I have prepared one synopsis which can be really helpful, all right, for you to understand that which kind of concepts they have covered. And in order to ensure that all the students can access this, that is the reason that I have given module references over here, and this synopsis will be available on my app in the study material section of the app. You can visit this website, theauditacademy.com, to download the app. All right, so without wasting your time, November 22 students, let us come to this RTP. Okay, so this RTP is really good. There are some really good mind-boggling questions, whereas some questions have been just copy-pasted from the module. Okay, so first we see is that there is an academic update for Audit Committee chapter. Now, there are quite a few amendments over here, so it is better that I cover it in a separate video. And I will be updating my notes for Audit Committee and Corporate Governance. So all of this will be included in that particular one PDF, and that PDF will be available on my app by 30th August 2022. So if you are viewing this video after 30th August, any which ways, it's already available. But if you are viewing this before 30th August, then in that case, please wait for a few days and you will have the RTP. My language of delivery in this video will be simple English so that it is acceptable across the country. All right, now everyone over here. Looking at the questions, so first you have the case study based question, which is a very good question. Still, in comparison to the previous RTPs, a very average question, but yeah, it is a good question. So we have professional ethics and company audit being questioned from this particular case study based scenario. These are the concepts that have been questioned, all right, in this case study based scenario. So everyone, you can read the case study, all right. I will read it very fast for you, okay, but you can pause and also read the case study. That will be very helpful, all right. So the first issue, I'll be reading the case study, the way in which they've asked the questions and the issues that have been dealt, so that this video remains short and useful for you. Okay, so the first issue that is there in the case study is about the ceiling limit, maximum limit of clients that can be accepted for tax audit. All right, maximum limit of clients that can be accepted for tax audit. Now they are basically testing your knowledge whether you know that ceiling limit on number of tax audit and ceiling limit on the number of statutory audit of companies is different. For stat audit of companies, it is obviously 20 companies as per Companies Act, 30 companies as per professional ethics, and there are lots of discussions to be done for that. There are videos available on my YouTube channel which can help you to decode ceiling limit, and also on my app. And but for tax audit limit, it is 60 assignments for corporate as well as non-corporate assessees. So that is the base, that is basically the thing that they are checking in the very first question. And as you can see, this Mr. K, a practicing chartered accountant, already has 19 companies for tax audit, and he has been approached by 40 new clients. So 40 plus 19 just makes it 59, but he is worried that whether he will end up breaching the limits. So he is just accepting 2 big clients who have approached him for tax audit. So that still makes it 19 plus 2, 21. It is well within the 60 tax audit limit assignment, and that is why for the first answer they have given option D over here. And as you can see in the options, they are confusing you with the number of 20, 20, 25 and all that. Okay, they are just testing whether you know this 60 limit for tax audit or not. All right, and I have given this module page number reference 18.113. Why I have given this? See, that means we understood that institute is interested in this particular question. Now, why I have given this module references? First of all, you can locate it very clearly. But just because you know this particular answer, I don't want you to feel overconfident. All right. Okay. So you should go and read tax audit ceiling limit and also ceiling limit on number of companies that can be accepted. Very interesting discussions over there and lots of adjustments that can be asked. That is why I've given module references. I want you to glance through the whole concept over there. All right. Then the next question is on section 147, penalties of Companies Act. So what has happened over here is that look at this. The company has not sent notice for AGM. They're also talking about another chartered accountant, a practicing chartered accountant, who is the auditor of a company, that is Mr. J. And the company has not sent the notice for AGM to Mr. J. Now, as per section 146, it is the right of Mr. J to receive that particular notice of AGM. All right, and the company has to send it. And if company violates any of the provisions from section 139 to 146 of Companies Act 2013, then in that case, obviously they will attract the penalties under section 147. So that is the second thing that they are testing, whether company has violated something over here or not. And if company has violated, then in that case, what will be the penalty? It is minimum rupees 25,000, which may extend to rupees 5 lakh. And that is the reason that for point number 2, A is the option over here. All right. So as you can see in my discussions, I'm not wasting your time. At the same point of time, I'm trying to ensure that you get the whole RTP over here. All right. So the third question that they are testing is, I found it very good. In fact, the third and the fifth question that they are testing is the ethical standard board decisions, which have been given at the very end of professional ethics module. And I have asked number of times to my students that was, please go through the ethical standard board decisions. We have discussed them in the class also. All right, and it is given at the very end. So if you see 18.151, so it is 151st page of professional ethics module, you will find these ethical standard board decisions, which are usually ignored by the students, and they have tested over there. So that is your question number 3. All right. So basically there is an ethical standard board decision which talks about that boss practicing chartered accountant cannot retain the books of accounts even if his fees is not cleared. All right. So Mr. J over here has retained the books of accounts because his dues are not cleared, and that is not good. All right. It will make him guilty of professional misconduct because of the decision of ethical standard board. All right. So that is the question number 3. I will do question number 5 so you understand that boss. There is something about ethical standard board decisions. I will cover it at once. All right. So basically what happened that Mr. K and Mr. J, they were practicing chartered accountants, practicing separately. Then they started their partnership. All that is fine. And the firm has received these assignments. All right. Now concurrent audit for this T Bank Limited, statutory audit of BBT Bank Limited. So they are very clear that if you are doing stat audit of, if you're doing stat audit of one entity, then you cannot do the concurrent audit of that entity. All right, and you cannot do a vice versa thing, and you cannot do a concurrent audit of the entity which has been sponsored by the bank, or you take it a vice versa position. All right, so if over here if you see the ethical standard board decision, all right, I'll just show you that ethical standard board decision to be more clear. So as I have discussed in my classes, there's lots of working over there. So concurrent auditor of bank X cannot be appointed as a statutory auditor of bank Y, which is sponsored by X. That is this decision number 18 over here that they are trying to question. All right, over there, but they are very clear that the bank was not sponsored by T Bank, so there is no problem over there. Okay. They can accept these assignments, offer to act as settler of a trust. It can be done. You can see these various decisions of ethical standard board. Yeah. It is permissible for a member in practice to be a settler of a trust, basically transacting on behalf of the trust and acting as a settler of the trust. And now this one, 4th and 5th, nicely they have put up over here. So everyone, I'll just show you that point to avoid any kind of confusion. It is this point number 17. All right. A CA firm which has been appointed as internal auditor for PF trust by a government company. So if you are the internal auditor for PF trust by a government company, you cannot be appointed as the stat auditor of that government company. All right, so over here, look at this, internal auditor of the PF trust and stat auditor of government company. So from 4th or 5th, either of these assignments can be accepted. It cannot be both over there. That is the 5th question that they have put up over there in this ethical standard. So 1st, 2nd, 3rd assignment can be accepted, and either of these. So as you can see, 1, 2, 3, and either 4 or 5 in case of 5th. All right, that is the answer over there. Okay, and the 4th question in this case study over here, yes, use of degree designation, very, very beautiful question. All right, section 7 read with clause 7 part 1 first schedule. So as you know that practicing chartered accountants are allowed to use designation chartered accountant, and along with that there are lots of restrictions in the descriptions and the degrees and the initials that they can write. All right, that's a 40-45 minute discussion. Okay, so that's altogether a different discussion that happens. Okay, but let us see what they have done over here. Okay, so KJ and Associates, Mr. K, chartered accountant. All right, CPA Ireland, fine, partner. Okay, so we need to examine this CPA Ireland over here. Now, as per the ICAI, I've given this page number reference also. 18.28 and 18.29. Let me show this because this can be a point of confusion. Many other questions are straightforward. Every time module opening may not be required, but over here you are permitted to mention qualification of certain institutions with whom ICAI has memorandum of understanding and mutual recognition agreement of the foreign accountancy institutes. So this point is discussed in the lectures of professional ethics. All right, and they are very clear that you cannot use the initials CPA on their visiting card, but CPA Ireland is one of, you can always say that you are a member of this institute. All right, and along with the institute name you can write, but you can't just say that you're a CPA. All right, so with the CPA Ireland Institute, since we have a memorandum of understanding mutual recognition agreement, that is the reason that there won't be a problem over here, and that is why this CPA Ireland is fine. Only CPA if he would have written, then obviously that would have landed him in trouble. All right, then this insolvency professional over here, insolvency professional designation is specifically in the exception, and it is allowed. When you go through these points, you will realize that they do not have a problem with you using insolvency professional. With section 7, along with that you have to read clause 7 part 1 first schedule. Also in multiple pages these discussions have been done. All right, so there is no issue over here, and I do not see any kind of professional misconduct in this case, in this question number 4 over here. Okay, so there is no misconduct, and see question number 4b, there is no misconduct. Okay, so these were the points in the first case study. I am not extending the lecture too much, and I'm ensuring that we are to the point over here. But I hope that you have done a detailed reading of professional ethics and you haven't skipped any part over there. As you can see, right from the first page till the last page, they can put up anything over there. Okay, now in this independent MCQs, question number 6 is fairly simple. So communication with the previous auditor, as per clause 8 part 1 first schedule, before accepting the audit, we need to ensure that we are communicating with the previous auditor. If the previous auditor is a chartered accountant, and that requirement applies in all types of audit where previous auditor was a chartered accountant. But the important requirement of communication is that incoming auditor should have some kind of evidence, positive evidence, not just evidence, positive evidence of the delivery done to the outgoing or the retiring auditor, the previous auditor. All right, now what has happened is that the incoming auditor has sent, he has a certificate of posting, so he has posted the letter. Correct. So only certificate of posting would have been a problem, because that just gives you the evidence that the letter was posted. Correct. But if you see that from the outgoing auditor, he has received an email acknowledgement, all right, from his official email ID. So institute says that if you get an acknowledgement from the official email ID, all right, or the last registered email ID with the ICAI, correct. Even if it is official email ID but not registered with the ICAI, that is also fine. All right, so it is email ID registered with the ICAI or last known official email address, correct. If you get an acknowledgement from the outgoing auditor, then in that case there is no issue. This is a positive evidence of delivery and there is no issue over there, and that is why for question number 6 you have B option over here. All right. It is a positive evidence of delivery, as the same is received from official email as per the code of ethics, and I have exactly given the page number of the module where you will find the 4 modes of evidence of delivery that you can have. All right, there are other 3 modes also of evidence of delivery, positive evidence of delivery that you can have. So if you are weak on this part, you should go through it. All right. And then for the students who leave audit of banks and NBFC and stuff in option, institute has given you a very strict warning, it seems, and there are really good questions over here. So question number 7. Question number 7 is about the NPA provisioning, but in case of NBFCs. Now, if you compare the, the loans, advances of the bank or NBFC, they're classified into standard asset, substandard asset, doubtful asset, loss asset. Now, if you compare bank and NBFC, you will see a very interesting thing, that the percentage provisioning is different for substandard, doubtful asset, and you will see that there are lots of differences. Doubtful up to 1 year, 1 to 3 years, more than 3 years. There's a difference of the percentage to be applied. All right. So in case of this NBFCs over here, standard asset will attract 0.4%. So 0.4% of this 700 lakh. If If you see, you will come to, yes, 2.8 lakh. Substandard asset will have 10%. So that is why 20 lakh over here. Doubtful secured up to doubtful secured and up to 1 year. So this will have another 20%, I mean 20%, so 2 lakhs over here. And doubtful secured and more than 3 years, but it will be 50% and not 100% provisioning, even though it is more than 3 years, because it is secured. So 25. So if you see, 20 plus 25 is 45, 47 and 49.8. And if you see, the answer for point number 7 is A. Now I have given the references where you will find this NBFC ka provisioning requirements. You should go through it, and I have said this to my students n number of times that, boss, there can be MCQs where they will question on this. In fact, they have still kept it simple. If they give you standard, substandard loss and all type of assets, and if they say that, okay, what happens in case of banks and what happens in case of NBFCs, you will really have time of your life, all right, over there. And that is a pure MCQ material. So I request you to go through it, because even in case of NBFCs, there are some NBFCs, where the provisioning requirement is still much more lenient over there, and classification requirement is much more lenient. So please go through that particular provisioning requirement and compare it with audit of banks. Okay, even on my YouTube channel, audit of NBFC revision video is available if at all you want to go through that. Okay, now Caro 2020 has been questioned, all right, and finally from May 22 attempt onwards, Caro 2020 has made a roaring comeback, all right, into the question bank. So Caro 2020 concept of statutory dues clause 7 over there has been questioned, and I've given the page number where you will find it. Okay, I really found this question good. So in clause 7 statutory dues, in clause 7 sub clause A, so 7A, you are supposed to comment outstanding dues which are outstanding for more than 6 months from the date they became payable, but you have to check the position as on 31st March. All right, as on balance sheet date and not as on signing the date of audit report. I repeat, so when as on balance sheet date, as on the year end 31st March, you have to check that as on 31st March, how many dues are overdue, I mean in arrears, for more than 6 months from the date they became payable. All right, so they have given date payable over here. Okay, 24th September, but as on 27 March it was paid, so not a problem. We have to check the position as on 31st March. Okay, 23rd October, so as on 31st March this was outstanding, although 24th April paid does not matter, but as on 31st March it was outstanding. However, from 23rd October to 31st March is within 6 months, so the amount need not be stated separately. 20th September date payable, date paid is 10th April, even though it is paid 10th April. All right, but as on 31st March it was outstanding for more than 6 months. Yes sir, yes sir. All right, and that is why 0.65, this detail needs to be given very clearly in 7A along with the names of the dues. All right, okay, now this income tax demand of 0.55 over here, date payable is 18th October but not paid till date. All right, so why is it not paid till date? Okay, chalo, not paid, but do you see that 18th October to 31st March is, it is still within 6 months, so not a problem. Okay, so in that 7A, all right, that amount of statutory dues that will be reported will be 0.65 lakh. If you see that there is a penalty of rupees 1 lakh, all right, which was given by GST department, but there is a representation that has been made over there. All right, only just a mere representation does not amount to legal dispute, and all that is 7B where you have to comment over there. But in 7A, the amount that needs to be reported in the dues is going to be 0.65 lakh. So that is why in 8th MCQ you will see B as the answer. All right, I'm going to the point. I cannot cover the whole subject over here. All right, but yes, all of these discussions are done in great details in our lectures. In fact, Caro 2020 is available for free viewing in my app also. All right, okay, but I do not have those clickbait lectures like 10 minutes and I will revise everything and stuff. All right, and in fact, if I do it, it will be a genuine revision. So please do not cut down on the discussions and don't just run behind blindly behind all the marathon videos and this and that, unless if the professors have done a very good job to cover the whole point. All right, because if you see, then such kind of discussions, they require some in-depth thinking. All right, over there. Okay, so everyone over here, in the 9th question, it is about audit of PSU, propriety audit. Propriety audit is what, where you try to bring out the cases of improper avoidable expenditure. You try to see whether the government undertaking has spent for the public interest or not. All right, so that is just the definition that they are questioning, and I will rate this MCQ as a very simple MCQ over there, that it is for public interest. All right, okay. Now question number 10, I liked it. They could have made it very good by giving all of the above kind of option. Here I think students will be able to guess this. In case of peer review, what is the scope of reviewer? All right, so there are multiple options that they have given. All right, scope of reviewer, but this one fits very clearly within the scope of peer reviewer. Sir, why are you not reading out the other options? Let me tell you very clearly that peer review is interested in audit and assurance services. All right, so only the tax filing and stuff, but that particular area is not going to look after. All right, whether all the article assistants and everyone is qualified and stuff is not going to look after. Compliance with all the legal regulations governing the firm is not going to look after. All right, so D is a very clear area which is given in the module in the scope of peer review. All right, and that is why you see it over here that I have given the page number reference also, if at all you want to find out that particular point in the module. All right, okay. Now moving ahead, descriptive questions. My God, I mean, one or two questions over here, were superb. So question number 11, I will give you a synopsis very clearly because my objective is to ensure that we are focusing on the material points. So in question number 11, basically already this company, it has its factory somewhere in a village. All right, and the auditors, when they were going through, they've understood that the company has received a notice from National Green Tribunal. All right, and lots of pollution laws have been violated by the company. For that, the company has received a show cause notice from the Pollution Control Board, and the tribunal, National Green Tribunal, the regional forest department, which is functioning under National Green Tribunal, has understood that boss has preliminary investigation has concluded that there will be a heavy penalty for this. The damages need to be corrected. All right, and they are considering the penalty of rupees 500 crores. And if you see, it is much beyond the profit and the turnover of that company. All right, so this is the point over there, and what company has done is, all right, that company has just disclosed this, and they say that the judgment will be in the favor of the company, and that is why company need not do anything about this. So company is not ready to create provisions, even though there is a show cause notice and they are considering, all right, for the penalty of rupees 500 crores. That was the show cause notice, and show cause notice, my company is just saying that the judgment would be in the favor of the company and no provision needs to be created over here, even though the chances of losing seem to be very bright. All right, so in this case, what are the available options in front of you as the auditor? Now this is called as a practical audit questioning. Now this can be answered by the students who have detailed knowledge about the auditing pronouncements. So first of all, this is a part of laws and regulations which can indirectly have a material effect on the financial statements, and that concept is covered in essay 250. All right, after that, if we understand that this is something that is creating material uncertainty over going concern, so essay 570, but in case of material uncertainty over going concern, the company needs to disclose the facts very clearly that there is a material uncertainty and it may not be able to realize its assets or discharge the liabilities in the normal course of business. When the company completely avoids the disclosures, then institute says that it has a material and pervasive impact. It makes the whole financial statement misleading, and if there are no disclosures given for this, then it can lead to an adverse opinion because it has a material and pervasive impact. Now let me tell you students, this cannot be discussed in 5 minutes or so. All right, I'm giving you a synopsis of what is covered inside this, but obviously there are lectures on my YouTube channel where I'm explaining what is audit opinion. There are lectures where I've given MUGC, but those are not 10 minutes revision lecture, correct? So I've explained it in great detail. So if you want to go through it, you can go through it. You can find some valuable content on my app also. All right, and you can clear out these concepts. In fact, I said 250 has also been discussed by me and on the YouTube channel much before it was uploaded, and I've already said that it is an important essay, and you will see that the points that I've discussed are forming a part of this suggested answer also. All right, apart from this, what I found was very interesting, that this is a company and they have said that boss, please tell us that how you're going to report this matter. Now, when they talk about reporting, there is a master chart that I give to my students, that when you talk about reporting, you have to think from the angle of opinion, you have to think from the angle of what can be covered in other paragraphs also in the audit report. Now, this is a case of a company. So under section 143, subsection 3, clause J, all right, there is a reporting requirement of the pending litigations and the provisions, all right, of the company, where you need to report whether the company has disclosed the impact of the pending litigations, whether the company is required to make provisions, all right, and whether they have made adequate provisions or not, and those kind of comments can also come over here. So, and that goes into a separate paragraph in the audit report, which is called as report on other legal and regulatory requirements paragraph. I was just amazed at this question, but not a surprise. I have ensured that my students have the practice of this kind of thinking, all right, when they're going through the lectures. So no matter, you may go on, keep on doing all past attempt question bank, this, that and stuff. But if you're not doing the core content, all right, the main content, if you're not doing that main content, then in that case, obviously, few things here and there can be difficult in the paper, all right, but still you can clear the paper if you have worked at least average in audit subject, all right, and you are not leaving things in option. Okay, study plan for November 22 is in a separate video, so you can refer that. Currently I'm focusing on the RTP over here. Okay, now we are through with this particular point, and I've given the references over here. That was not possible to point out each paragraph number, page number, and this and that. So I've said that about this from auditing pronouncements. Now the next question is fairly simple, but provided that in case of SF 530 audit sampling, if you have read only the sampling techniques and stuff and a very summary kind of notes, then you may not get this, all right. But at the end, we discuss in the audit sampling the results possible in case of sampling. So after the sample verification is done, what are the possible results? They could have asked a really technical question from that, but they have made it simple at the end. That at the end of the day, if auditor is not satisfied, all right, with the sampling that he has done, and if he thinks that his sample has not given him enough confidence to form an opinion, then in that case he can ask management to do some further investigations, and he can also modify the nature, timing, extent of his audit procedure. So it is the main that core 2-point answer over here, which you can see from the suggested answers also, all right. So based upon my synopsis, you can read this answer. So these are the material points over here. Okay, now over there in question number 13, question number 12 done. Okay, so question number 13, I love this question. I mean, I was waiting when they will question this, all right. So when I teach auditing pronouncements, some people make fun of me that, okay, boss is going in great details and stuff, and why he's doing that. But one fine day, if all of these questions come in the paper, then we need to ensure that, you know, the students are getting through, all right. And it is our duty to cover the things that are given by the ICI. So auditing pronouncements mein essay 240 mein, there is a very good concept, all right, that when auditor is performing risk analysis, risk assessment procedure, at that point of time, in any audit, he should first presume, मान के चलो, he should presume that there will be a risk of fraud due to revenue recognition. Yes, just presume it. However, during the course of audit, if you think that there is no risk of fraud in revenue recognition, then you're supposed to document that particular thing, all right. So this particular concept has been questioned by them. Obviously, along with that, there are points of SA 240 of risk assessment procedure and stuff. But this is the core concept that they have questioned. That initially audit team thought that there is no fraud risk over there or risk of improper revenue recognition. But then when they were testing internal financial controls, they came across a few points that there were controls were not properly designed for revenue recognition. All right. Audit team still thought that there is no risk of fraud in revenue recognition. All right. Then they came to know that management has not accounted revenue. Some revenue was received partially in the CFO's personal account and stuff. So finally, they've understood that there is a risk of fraud or improper revenue recognition over here. All right. So what are the options? I mean, how you are going to deal with this as an auditor? So that SA 240 stuff has been questioned. But however, along with that, in the answer, they have also given the reference of section 143 subsection 12. This is the synopsis prepared by me to save your time in this particular video. All right. So I always say that along with SA 240 fraud reporting, you should always consider if it is the case of a company about duty to report fraud to the central government. So that particular point also they have covered over there. All right. But nice one. This whole discussion, I'm so happy that they have finally covered up this discussion. It's a very beautiful discussion in essay 240. All right. Okay. Now, when we move ahead in further questions, so question number 13 is done. Question number 14 is about audit in automated environment. All right. In audit in automated environment, whatever they have given earlier, they are saying that please explain general IT control, application controls, and IT dependent controls. So general IT controls are the IT controls across all the applications, like controls over database or controls over server and stuff. Application controls are in each particular application, like salary, purchase and stuff. In each application there are separate set of controls, and IT dependent controls are actually manual controls, because we humans are dependent upon IT. All right, so manual controls which are dependent upon the reports received from IT, and it is there separately in the topic of audit in automated environment. And this is one of the favorite thing that they always question, this particular concept, that concept of computer assisted audit techniques and stuff. This has always been their favorite. All right, so there is no surprise that this question has come up. All right, I think this has come up what 50th time or so now, and there can be also MCQ questions from these type of controls to recognize. All right, whether it is a general IT control, application control, or IT dependent control. All right, question number 15. Sorry, I'm not going to discuss this. So this is testing your knowledge of division 2 of schedule 3. So preparation of financial statements in accordance with the Ind AS format that is given in schedule 3 over there. All right, and few things have gone wrong over here, and they are asking you to comment on the presentation part. All right, so you can go through the suggested answer and try and find out those things, but I think first you should try and find out with your own knowledge of FR. Now, it has been my personal experience that when I am teaching students also, I come to know that they are not very clear about the schedule 3 format, because in FR they are so busy in solving individual sums and questions and individual adjustments and stuff, that they just forget that, boss, we are doing chartered accountancy course, and in that schedule 3 of Companies Act 2013 needs to be done properly. I mean, it should be at the tip of your tongue, man. You know, the format of the accounts. Otherwise, how do we call ourselves as chartered accountants? So please ensure that you're doing it properly, and in FR also you're very, very clear about the format and all the adequacy of the disclosures. All right, ensure that you are reading at amended notes of FR March 21. There were heavy revisions in FR schedule 3, so ensure that you are having the recent set of notes, because November 22 is your attempt. So maybe let us say if you cleared in November 19 or so, then in that case many students would have done FR earlier, and they are then not in touch at all, and all of a sudden they pick it up at the time of study leave. So please ensure that you have all the amended things when it comes to the subject of FR. All right, okay, so we are through with that. Now in the next question number 16, it's a simple dolly question, not a very difficult question. It is a question on Caro 2020. So again, clause 9 has been questioned over there. That is default in repayment of dues. Now there has been a default, all right, and that is what they are questioning. But the interesting thing in this particular question is that there was a default, okay, and then they restructured the loan. I mean, Gotham Limited had borrowed the funds, and then they restructured the loan, and after restructuring, the bank has closed earlier loan and they've restructured it into a new loan. So Gotham Limited is saying that, oh, okay, there was a default, all right. However, bank has closed the earlier loan and there is a new loan that has been given to us, all right. And this restructuring agreements and stuff were signed on April 8th, all right. But as on 31st March, that restructuring was still not approved, all right. But see, there is a default, okay, and there's a default during the period of audit. I mean, during that audit period that we are auditing, correct? And in that case, obviously, we need to comment upon it over here, okay. So clause 9 needs a good reading from your side. So they have given clause 9A के अंदर जो reporting requirement है that they have specified over here, and they are saying that please comment on this particular default, all right. However, if you also see that in this particular answer, company has not given the disclosure in their financial statements about this whole default restructuring and stuff. All right, they did not provide any disclosure, and that makes the financial statements misleading, and you can give a qualified or an adverse opinion, because when there is a material misstatement, all right, which is not rectified, there are options, either qualified or adverse opinion. because we don't know the balance sheet total of this company and stuff, so we cannot understand whether it is material but not pervasive or material and pervasive. And that is the reason that if you see they have given you the options over here, then you can go for a qualified or adverse opinion. Okay, so I'm coming to the material points very quickly so that this becomes a very productive video on RTP for you. All right, now in question number 17, it is, I think every single student will be able to guess. I do not have doubts on your caliber for this. So CA Bahubali is the auditor of the company, and when he was going through this audit, what has happened is that he has not received some evidence. Now when sufficient and appropriate audit evidence is not available even after trying your level best, all right, there is a limitation of scope of audit. There are only two possible opinion, either qualified or disclaimer. But when you go through this question, you will realize that for inventories, which is 38% of total assets, he is not satisfied. He is not satisfied for the data amounting to rupees 240 crores and stuff. He is not satisfied with the records over there. So basically this is a case of sufficient and appropriate audit evidence not available, and the possible effects are turning out to be material and pervasive. So when evidence is not available and the possible effects turn out to be material and pervasive, we are not in a position to form an opinion, and that is why disclaimer of opinion will be given. However, the matter does not end over there. All right, they are also saying that please write the opinion paragraph and basis of opinion paragraph. Now here student will be tested. I have said this n number of times that at final CA level they will try to test your ability to draft the opinion paragraph and stuff. All right, so they will try to test those things. All right, so please ensure that you are going through this and you know about the drafting and stuff, and you're not just read from the charts and you're not just finished it off at like a damn crash course. All right, so please ensure that you know about the drafting, because that is something that they can test. All right, so that is what is given over here. And the next thing that they have questioned, this is very beautiful, that when auditor gives a disclaimer of an opinion, what happens is that there can be lots of changes in the audit report. One of the major changes that in that auditor's responsibility paragraph, which is a very big paragraph, all right, in a normal audit report, it is substituted by only 3 points when it comes to disclaimer of an opinion. So that knowledge they are testing over here. All right, so because of disclaimer, what are the changes, that full changes ka knowledge they have tested over here. Because a big auditor's responsibility paragraph, which normally has 9 points, is substituted by only these 3 points over here. Okay. Now, next is audit of CFS. Oh, a very simple dolly question. This is testing your knowledge of Ind AS 110. Now you know that if an entity is an investment entity in Ind AS 110, then in that case it is exempted from preparation of CFS. But what are the conditions for an entity being an investment entity? Obviously, it is pulling money from the investors. It is giving them return on the investments. It is investing into the securities market. So it is, yes, measuring measuring the investments in the subsidiaries and stuff. All right, and on performance of its investments on fair value basis. So I'm not teaching everything in FR over here, but they have given the investment entity conditions over here, and they are trying to test your knowledge of investment entity as per Ind AS 110, which is one of the favorite discussions of FR professors. So you might have studied FR from anyone. I'm so sure that it is covered in your discussion. All right, so here, since it is satisfying all the conditions, the exemption is there for the exemption is there over here. All right. Yeah. Ind AS 110, and as you can see, this company is not required to consolidate. Okay. So I'm moving very quickly over here. Oh, wow. This is a very good question in case of audit of banks. A very good question. So first of all, it all depends on how much knowledge you have about cash credit overdraft and whether you have studied from the recent modules of audit of banks, which were updated from May 22 attempt onwards. All right. So it is very clear that in case of cash credit and overdraft, there are some limits that are sanctioned by the bank, and those limits are renewed time to time based upon the stock statements and current asset statements of the borrowers. All right. Now they are giving you lots of facts over here, and it is your brain that they are trying to test whether this particular loan that has been taken by the borrower, that is CCOD, whether it will be marked as NP or not. So the main things over here are that there is a credit facility of rupees 50 crore that borrower is enjoying against the security of stocks and book debts. Now when we saw that what was the balance in the overdraft credit facility, all right, you saw that it was 55.65 crore and the credit facilities are of 50 crore. Oh my God. So the outstanding is exceeding the sanction limit over here. All right, the amount is exceeding the sanction limit, but it was during the whole month of March 22. All right, and so we try and we understand that it is not overdue for more than 90 days, correct? So first point done, still not NPA. Okay. Second point, we see that the latest available stock or book debt statement for the February 22 showed a drawing power of 48.5 crore only. Oh, so there was a 48.5 crore only drawing power. My God, now comes another twist. So let us say that if the outstanding balance was also overdue in the month of February, still it is okay. Not overdue for more than 90 days as on the balance sheet date. All right. Still, there is no NPA. There is no point which indicates that it is an NPA. So stock book debt statements of previous months showed adequate drawing power. So at that point of time, there was no issue. Okay. Now there was a stock audit of the borrower. Obviously, the borrower is enjoying credit limits which are in excess of 5 crores. So there will be a stock audit of the borrower, which whereby the bankers will send their officers at the premises of the borrower. So there's a stock audit of the borrower over here. And in that stock audit, we understand that even the stock audit report has said that there is adequate drawing power in the account and there is no problem. However, there are some adverse comments on the declining turnover. That is just a general management information that stock auditor has given. Still nothing to conclude that it is NPA. Now the next point. The renewal of overdraft facilities was due on 20th October 2021. So these limits, the overdraft facilities, the limits that are sanctioned, they need to be they need to be renewed. All right, and there is a due date mentioned that okay, on this date we will again consider and renew it. And if you see that the renewal was due on 20th October 2021, the account was short renewed by competent authority for a period of 3 months pending submission of complete papers. All right, so for a little period it was short renewed. There was some pending submissions of complete papers. But let me tell you, with respect to renewal, RBI guidelines say that 3 months, I mean, after the date of renewal, that renewal should not be overdue for more than 3 months. However, it can be extended till 180 days as on the date of balance sheet, and we try and understand that 20th October 2021 from there till 31st March. So it is not exceeding 180 days, all right, that renewal period, and there is no problem over there. Okay, so we understand that there is nothing over here which can conclude that this account is NPA. Although there are some deficiencies, but those are temporary deficiencies. There is no concrete data which can help us to conclude that this account is NPA. All right. But it was a very, very, very good question. I've tried to cover it in short over here, but this is a detailed discussion. And if you want to read module page numbers, then I've given those page numbers where these discussions are done in the bank audit module. All right, I'm recording this video on 19th August 22, and as on today, all right, I've checked the modules. All right, this is important to say because time to time if the modules are changed, then you should know which version I have checked. All right, okay. Now we move ahead over here in audit of NBFC. This is again good question, but these questions students are used to. Every professor of audit also covers this question. They know audit of NBFC mein, in order to understand whether the company is NBFC or not, there is a 50-50 rule. All right, so last audited balance sheet is taken and we see the 50-50 rule. What is the 50-50 rule? Whether the financial assets of the company are more than 50% of the total assets net of intangible assets. All right, and whether the income from financial assets is more than 50% of total income. If both the conditions are satisfied, then the company is under NBFC criteria, and that is why they need to obtain registration certificate from the RBI. All right, so everyone, this whole calculation over here is there. You see, these are the financial assets over here. Okay, now these are the total assets and intangible assets. So this figure minus this figure. All right, so 4 minus 5 will give the figure of total assets, and we will add this. This is financial assets, so this both percentage will be compared, and this look at this, income from interest and dividends is so much and gross income is this much. It can be clearly seen that it is more than 50%, and you can see the calculations over here. Okay, yeah. So as you can see, this figure, total financial assets and total assets netted off by intangible assets, you can see this is more than 50%, all right. And as you can see, income from financial asset is more than 50% of the gross income. So 50-50 rule over here satisfied, and that is why they need to apply for registration, all right. Okay, now next is audit under fiscal laws. They have tested a very common sense concept over here, applicability of tax audit. They haven't tested on the tax audit clauses, but we know that there are questions on tax audit clauses also. They have tested a very basic question that you know that tax audit का जो threshold limit है, the applicability limit was revised upwards to 10 crores, provided that you know if your cash receipts are not exceeding more than 5% of the turnover. Hello, but that was for business, not for profession. All right. For profession, the limit still stays at 50 lakh rupees. All right. So here it is a partnership firm, all right, which is being examined, and they are getting professional receipts. So for professionals, that benefit is not there. All right. And that common sense is being tested over here. All right. That common sense is being tested over here. I haven't explained the full provision, but they are trying to explain that in case of profession, every person shall get his accounts audited if his gross receipts in profession exceed rupees 50 lakhs. All right. The above said firm is engaged in providing engineering consultancy services. Benefit of enhanced threshold limit is not available to persons engaged in professional activities. This particular point they have questioned over here. All right. And if you see, I have given all the page numbers and stuff. Okay, so you can just get a proper synopsis of what is going on. Okay, and next question is now very simple question that CAG of India has appointed the auditor, I mean some chartered accountant, for conducting performance audit. All right, and now that is for performance audit. Now in case of performance audit, you are supposed to test the economy, efficiency, effectiveness of the operations, correct? And in propriety audit, you check that whether the expenditure was as per the financial rules, prudence, and improper avoidable expenditure was actually avoided and it was not incurred and stuff. But if you see over here, what the chartered accountant has done is that he has been appointed as a performance auditor, all right, and he's trying to check all the expenses, whether it is in conformity with public interest. Only this much he has done. CAG has rejected the audit report. Obviously, the audit report will be rejected because he has not done proper performance audit. So you have to explain them what is performance audit, economy, efficiency, effectiveness of operations, and what are the objectives of performance audit, why it is helpful and stuff. So it's a very good theory answer on performance audit that they've given over here. A long answer. I don't think that students may be in a position to write word to word, but if they broadly explain what is performance audit and if they are able to differentiate that what this is not what has been done by the chartered accountant, that is why CAG has rejected the audit report, I think you will be in a position to score maximum marks over here. Peer review, quality review. All right, there can be lots of good questions from peer review, quality review. Although the questions over here are very simple. Question 23A. Now, while conducting quality review, all right, what are the points of SQC1 that will be checked by the technical reviewer? It's a very simple answer where all the points of SQC1 are just given in the form of questionnaire, whether the systems are proper or not, whether documentation has been maintained or not, whether independence procedures are complied or not, and whether this has been done or not. So on the quality review module, that is the first thing that they have given, and it is also one of the module question. All right. So I've given the page number over here. Yeah, where is it? Yeah, page number over here I've given. However, in RTP they've printed wrong answer. I am saying this very clearly. They've printed wrong answer. This is just a copy paste error from their side. I can understand the human errors. So this is a pure copy paste error. There is one more question in quality review which talks about how to review whether the auditor has maintained professional judgment or not. All right, that answer has been printed over here, whereas the question is different. Correct. So I've given the right reference over here, that where you will find this answer. Maybe I think institute will issue some kind of corrigendum, all right, when they tried, when something goes wrong, they issue one PDF that okay, please ensure that this is the revised thing that you are referring to. Maybe for 23A they will issue some kind of corrigendum. All right. 23B, when peer reviewer during the reporting stage, if he has some kind of observations, all right, or if he is not satisfied, then he is supposed to give a draft report, preliminary report first to the practice unit, all right, and then get the responses from the practice unit, and then give a final report to the peer review board, marking a copy to the practice unit. This whole reporting stage of peer review, which is a very big discussion, all right, has been questioned over here. All right, and the main problem is that the peer reviewer, even though there was some observations that he had, peer reviewer did not share any of his observations with the practice unit as a draft, and directly what they did is they submitted final report to the board, which is wrong. All right, So that reporting stage of peer review has been questioned over here. Yeah, yeah, okay. Now, when we move ahead, professional ethics, there are very simple questions. There are a couple of questions over here. In one question, CA Dev is issuing a turnover certificate for ASAUS traders, all right, and ASAUS traders is nothing but his own brother's entity. Now, you cannot examine the accounting information and express an opinion, all right, where you have your substantial interest, and that substantial interest definition, they have covered this point that if your relative is the proprietor or partner of an entity, all right, you need to take into consideration that point as a substantial interest, all right. So that is the thing that they have given over here. Clause 4 part 1 second schedule, and in this B question, all right, it's very clear that this is purely an act of negligence, gross negligence, careless attitude, and it's a very simple question. You can go through that. So clause 7 part 1 second schedule has been given as a reference over here because of the act of gross negligence, all right. And professional ethics is everyone's favorite, but they have not really tested a very good question. It's a very, both of these are very simple questions over here. All right, so for 24, you see clause 4 part 1 second schedule 24A, all right, and he's guilty over here, and then over here gross negligence point, yeah, liable for professional misconduct. Okay, now question number 25, they have given short note, but short note kind of questions are not asked in the paper. Yeah, so these questions can be asked, but in the form of a 3-4 5 line question also. So management audit questionnaire, in internal management and operational audit, there is this concept of management audit questionnaire. So these are pure theory answers that you need to refer from there. Management audit questionnaire is nothing but a questionnaire in the form of yes, no, not applicable, and the questions are asked in such a manner that as if you are conducting a management audit, that is audit of the management. All right, so that is the point over here. I've given the module page number references straight away for these points. Yeah, yeah, okay. Then free look cancellation. Free look cancellation is an option in life insurance policies which is given to you of within 15 days of the policy. You have an option to cancel it, all right, and free look cancellation is that option that is there, and you will get a refund of the premium after deducting the proportionate risk premium and medical charges, if any, that have been borne by the insurance company. So that free look cancellation point has been questioned and what you will do as an auditor over there. And then services rendered by forensic auditor. These are the activities that are performed by forensic auditor. He will help you in drafting the questions. He will help you in, in the legal hearings. Forensic auditor will help you in finding out the documents, the key evidence, all right. So whatever activities are done by forensic auditors that are over here. Forensic audit is one of the topic where only theory questions are asked, and I've said this to my students n number of times. We cover it in our discussion also. So please ensure that you are going through this RTP. At the end, I think RTP has given a couple of all these simple questions, straight away theory knowledge that they are questioning over here. So I hope that you found this discussion very, very productive, and I hope that for the students who have done things in very, very short, they understand that there are few areas that they need to rectify. But if you think that I can be of any help, all right, and you want to have a conversation, you can download my app and we can have it in the chat box. For the students who have already enrolled with me, you already have WhatsApp doubt solving facilities, and you also have Zoom sessions, all right, where you can come and clear your doubts. But ensure that you are clearing the subject with exemption. All the best. Take care.